That's crazy.
Yeah.
That he would say this, but again, as you were saying, every institution that is at the foundation of society is crumbling.
Welcome back to Library of Wealth. Today we have Max Keiser giving his prediction and update for Bitcoin and how cryptocurrency will play a major role in the economy in the last part of 2023. As a prominent Bitcoin advocate, Max Keiser expressed unwavering optimism about the impact it will have, especially with so many crypto tokens being wiped out just in the last year alone. He firmly believes that Bitcoin is a revolutionary force that will redefine investing and challenge the traditional financial system. Keiser emphasizes the value of the ideal collateral provided by Bitcoin, making it an attractive store of value, impervious to the inflationary pressures that affect fiat currencies. For him, it is not merely a speculative asset, but rather a hedge against the risks associated with central banks and government-controlled money. Keiser also championed the role of Bitcoin as a disruptor of centralized financial institutions, even predicting the fall of major players like FTX, Gemini, Celsius, and Voyager. He believes that because of growing adoption by institutions, this is just the beginning, and more significant players like BlackRock will allocate substantial funds to Bitcoin as part of their investment strategies. Let's get right into the latest interview with Max Keiser and Stacey Herbert as they discuss the future success of Bitcoin, the crypto market, and what to expect in the coming months. Don't forget to share your thoughts and comments down below and leave a like if you enjoy the content we do here.
And none of these words mean anything. Custodian bank, it doesn't mean anything. Prime trust, of course, it's totally untrustworthy. It's just a total breakdown in the financial markets. The financial custodians and everybody across the board is just engaged in massive kind of liquidation and fraud, all because of interest rates are going up, right? So as long as interest rates are going down for 40 years since the early 1980s, all sins could be masked by lowering rates and extending the maturity dates on everybody's bonds. And what happened was, starting in 2022, interest rates started going up in this now secular move higher, which is going to last a long time. And you can't taper a Ponzi scheme. So all of the bad apples are now being exposed, and they're all contagiously connected to each other. And so this is just going to keep going, and banks are still in jeopardy, and we're nowhere near the end of this cycle.
When you deposit your money in Bank of America or Citibank, it's they own it, right? Essentially, they own your deposits. But in a custodian bank, they never own your money or your assets, whatever you put in there.
Yeah, that's according to Investopedia. What is a custodian bank? It's a financial institution that holds customer securities for safekeeping to prevent them from being stolen or lost. The custodian may hold stocks, bonds, or other assets in electronic or physical form on behalf of its customers. Often a custodian bank does not more than provide asset protection. It does a few extra services, but yeah, it's basically like glorified, safe deposit box. It's a custodian. They are custodians, and there's a definition for custodian. So the Prime Trust, which is a custodian bank, it turns out that they were like wildly speculating, committing all kinds of crazy stuff.
Well, they were trying to cover up the loss of funds. So they're supposed to custody your assets, and they were custodying Bitcoin for many Bitcoin companies, including Swan, including Strike, including like loads of big companies in the past year. And then they started to get pulled from state by state, Texas, North Carolina, and then Connecticut. And Connecticut they actually wanted Prime Trust to liquidate the customer assets, which is weird. But the other thing I saw, like, that was bizarre that I didn't know, is I saw somebody tweet a quote from Gary Gensler, who had spoken about these crypto custodian banks in, I think it was a Congress and testimony over the past 2 or 3 years. And he said, just because they call themselves a custodian bank, it doesn't necessarily mean they are. And I was like, what is that? Like, how can you say that? Like, there's like very clear laws about it. And it's a totally different regulatory regime to say what Goldman Sachs or JP Morgan or Citibank or Bank of America, all those other banks have to undergo. They can do more speculation with their assets of their customers there, some rehypothecation. But like, these custodian banks are not supposed to be doing that. And so when he actually said in testimony, like, they're not necessarily custodian banks. And you're like, what does that mean? And we're like, how are they able to call themselves that? Right. So Everything in crypto is just crazy. But it seems to maybe be some sort of democratic setup. I don't know. But this is apparently a firm that they were able to speak as a witness in these hearings on Tuesday or Wednesday, I believe it was, on the Financial Services Committee in the U.S. House of Representatives. And the remarkable thing is, like, they went there and they claimed that this broker-dealer license gives them the authority to sell these tokens. And everybody, like, of course, all the Bitcoiners in the world and everybody, like everybody who has any sense to their name or know what a broker-dealer license means, like, just because you have a broker-dealer license, you can't sell unregistered securities. The security itself still has to register. They mentioned that they could sell Ethereum, which they say is a security. And it's like, well, Ethereum would have to register as a security. You can't just sell an unregistered security. It's like, but it's so weird that the Democrats called this guy as proof that all these other companies can register. Like, the law is already there. They don't need to change the law like many are advocating. We need some regulatory clarity and stuff like this. They're saying, no, see, these guys registered and they're able to do it.
Yeah, because I'm a vegetable seller at the supermarket and I've got this goat here, and I'm going to sell it as a tomato. Because I'm a vegetable seller and whatever I sell is a vegetable. Yeah,
that's a good way to put it.
So I'm an exchange. I have a broker-dealer license. Yeah. I have this can of dog food that I just stole out of the garbage can. And I'm going to sell it as a security on my securities exchange because I'm a broker-dealer.
Yeah.
Right. Obviously, that those two do not have any relationship to one another. You have a process to register a security with the Securities and Exchange Commission, which then can in turn be sold on an exchange, a registered exchange. Having an exchange does not connote legal agency to sell whatever comes over your desk as a security. The fact that that got into any kind of testimony in Washington whatsoever is a testimony to whoever runs that committee to having absolutely not 3 brain cells in their brain to rub together, which is shocking, but it's not shocking because the level of financial illiteracy in these political circles is epic. It's like they're repudiating the whole Industrial Revolution. You know, part of the Industrial Revolution was to create uniformity in size of things like nuts and bolts and tools, so you could create an assembly line and then create mass-produced objects and cars and things for consumers to buy. But, you know, here in the securities industry, in the financial world, they're saying that everybody has their own definition of what a security is. Yeah. And there is no uniformity. There's no rules, actually. And so we're just going to all flog these things like a vast open bazaar where there's total chaos. And then we're going to say that that somehow is tantamount to capitalism. No, it's tantamount to absolute chaos and fraud.
Earlier this week, BlackRock, the world's largest asset manager, appears to be going all in and recommending an optimal portfolio allocation of almost 85% Bitcoin. Despite its volatility, BlackRock sees Bitcoin's positive trajectory as a reason for such a massive allocation. Economic analysts have been delving into previous BlackRock reports on the risk versus reward. Their findings are heavily weighted toward Bitcoin, which would drive its value to an unprecedented new high. If this were to take place, and the total global wealth is around $800 trillion today, Bitcoin would be $190 million per coin, something that would send shockwaves through every market on the globe. In addition to its recently filed spot ETF application, the firm has also recommended this optimal portfolio allocation for the world's largest digital asset, so the coming months will definitely see investors on high alert. What do you think about the latest interview with Max Keiser and Stacey Herbert? And what are your thoughts on the impact of Bitcoin's growing institutional adoption? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.